India's insurance Goliath Life Insurance Corporation of India proved to be non-profitable for all categories of investors as its shares fizzled out on the bourses yesterday. Against expectations of a marginally lower listing, shares of LIC debuted on the BSE at 867 rupees, down nearly 9% against its issue price of 949 rupees. They further fell to a low of 860 before settling the day at 875 rupees apiece. With this, LIC's market cap stood at 5.53 trillion rupees at the end of its debut day. This means investors lost roughly 47,000 crore rupees in the IPO, which valued LIC at 6 trillion rupees. However, investors are unperturbed by the muted debut as they eye LIC's long-term growth prospects.
LIC is a long-term play in the insurance sector, and investors should not look at listing gains alone. Any opportunity to add to LIC at a price lower than the IPO price should be used to invest more for the long term. There may be a bit of retail selling. The long-term fundamentals of LIC remain intact. Once the dust settles on the market due to the ongoing issues like Ukraine-Russia war and the worries on the inflation front, stocks in the insurance sector, along with other beaten down stocks in the banking and NBFC space, should see good momentum.
B. Gopkumar of Axis Securities too opines that investors should not exit LIC stock at current levels as it is a play on the growth story of the under-penetrated life insurance industry. LIC's sustained market leadership position, robust pan-India distribution network, and shifted focus towards profitable products will support margins and improve persistency ratios. All these factors will collectively make LIC an attractive pick from a long-term perspective. However, there's more to LIC's listing than what meets the eyes. Funds from IPO will be critical to bolstering government finances and meeting a deficit target of 6.4% of gross domestic product for FY23. LIC's IPO was already slashed by almost 50% to ride the market volatility, and still a tepid response to one of the most well-connected state-owned entities may prompt the government to rethink its divestment strategy.
The fact of the matter is that they have sold only 3.5%. So this gives them a currency to raise money when they want through OFS, offer for sale. So that is what I think they really wanted in terms of listing, so that they have a currency which they can encash as and when they want. And of course they have another 96.5% of the company left, so they can easily sell it when the market performs. As regards other divestments, well, of course, some of the divestments there are some issues, like say for example BPCL. I think it's too complicated. There are too many subsidiaries, too many other considerations. So therefore, just cleaning it up for readying it for sale to private parties who probably just want a pure refinery and distribution pay, and not all the other stuff that goes along with that. So I think that is probably taking time, and it is as a composite sort of offering. Maybe they were unable to generate enough interest to BPCL as it is, but they will have to sort of clean it up and ensure that they offer what the market wants, what the entrepreneur wants. So whenever that happens, I think there will still be a demand for that. It is not as if the refinery business is going out of fashion anytime soon. So there will be a lot of demand for that.
According to a Reuters report, the government is considering inviting bids for a 20% to 25% stake in Bharat Petroleum Corporation instead of an outright sale of its entire 52.98%. Similarly, it will likely put on hold the sale of state-owned helicopter service provider Pawan Hans indefinitely, as per a Business Standard report. The centre has missed its revised divestment target twice in 3 years. Now, achievement of this year's target looks difficult too, which assumed the completion of the process to privatize BPCL and SCI amid a market drought due to the spillover effects of the ongoing war. Against this backdrop, Bhatt expects the government to receive decent market proceeds from various stake sales as and when market conditions stabilize and the government reworks bid offers as per investors' interest. On Wednesday, investors will eye any rebound in LIC shares. Besides, they will also track March quarter results and global cues for further market direction.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.